expensive, investments are more costly, people don't want to be making the wrong decision. And to be honest, if you're head of corporate development somewhere, you're not going to get sacked for not doing a deal. You probably will get sacked if you do a deal that turns out really badly.
Hi guys, today I'm honored to be speaking with Mr. Alex Brendly, Director at BTG Corporate Finance. At BTG, he takes care of M&A activities where he helps companies with complex acquisition processes, right? Prior to BTG, Alex has spent more than 8 years at Clearwater. That's amazing. Thanks, Alex, for being with us here.
You're welcome. Good to see you, Bhavesh.
So, Alex, how did you start off in the investment banking industry? I mean, if you can just brief us about your background and what made you, get into this entire industry, and what was the exciting thing about it?
Yes, I took a fairly well-trodden path into sort of mid-market corporate finance. So straight out of university, I joined the graduate scheme at Deloitte. So I did my chartered accountancy qualification there. I was in the assurance and advisory teams. Being in the Midlands, I spent a lot of time working with industrials and financial services businesses. And I thought it was really interesting actually spending time getting under the skin of a lot of businesses, learning what makes them grow, what makes them driven, how they succeed. But I was really wanted to do something a bit more forward-facing, a bit more impactful, actually, help shape strategy and help drive real results for customers rather than the sort of backwards-looking, ticking and bashing and checking of auditing. So I moved into corporate finance, started working at Clearwater back in 2016. Spent 8 years there, sort of progressed all the way through from associate through to director, working on M&A transactions, sell side, buy side, some debt advisory work, did some real estate advisory work in the depths of COVID when normal mid-market M&A was not necessarily happening as much as you'd like. And then a couple of years ago, the opportunity came to join BTG. In the Midlands market, we're seeing a lot of opportunity, a lot of change. Some bigger firms are withdrawing from the market. Other firms we used to compete with are refocusing elsewhere. So there's a bit of a gap for us. So there's a senior team of 4, 3 partners and myself. We cover all sectors. We cover all transaction types from sell side, buy side, management advisory. One of the things we do, which is quite interesting, I think adds quite a bit of value, is we actually do a retained advisory role for sort of buy and build strategies.
Okay.
So we're seeing it more and more at the moment. Organic growth is challenging for some businesses, or it's just not progressing at the pace they would like. They actually start to consider, can we supercharge this with a buy and build strategy?
Yes, absolutely, yeah.
So yeah, we'll kind of get involved, help them, decide the strategy, map the market, go out, do the approaches, do the transaction delivery, and then sort of help them on their way after that. So that's something which is quite valuable. What else have I got?
And do you guys also take care of fundraising? I mean, do you also help raise capital for the companies that you're actually helping them with the strategic advisory?
Yes, yeah, we do. So in terms of raising funding for growth, we would look at your more traditional, private equity transactions, capital. We don't tend to get involved with any really early stuff, so we wouldn't look at Series A or kind of VC, anything like that. But funding for growth, whether that's debt finance, equity finance, or a combination, is one of the core services that we offer.
Amazing. So, Alex, you basically started off your career almost like, say, 13, 14 years, 15 years ago, right? Back then, things were very, very different. We did enter the technology era during that. We started off from 2000 onwards, and a lot of people started relying on internet for deal sourcing, for due diligence, right? But especially with this AI coming into the picture in the last 1-2 years, I mean, we have been hearing about AI for a very long time, but the actual usage has started happening in the last 1 or 2 years, right? and especially in the last 6 months, a lot of people, there's been a huge wave of people where they have started relying on AI for their day-to-day job. How are you seeing this entire thing shape this investment banking industry, and what is it that is helping you with your deal sourcing, or with your deal, right? And where is it actually which is creating a problem or a hurdle for you?
Yeah, I think AI is very interesting, and like you say, it's the last 6 months it has really ballooned.
Correct.
So if we were having this conversation 12 months ago, you're absolutely right. AI would be an idea, and people might be starting to play around with ChatGPT or Copilots. And the pace at which it's developed over the last 12, 18 months is incredible. And I think that the big difference for me is that it's almost leveled the playing field of information. So there's so much information that it is able to easily assess, aggregate, interpret, and present, that it almost levels the playing field, brings everyone up to that position where you can get a very good understanding of a business or a market or a sector quite quickly. Whereas before, when I started out in my career, if you wanted to speak to a business in a particular sector, you and your team would spend days researching that, looking at who are the key players in that sector, what are the key transactions in that sector, what are the valuation multiples, what are the dynamics. Whereas now you can get a reasonably good base level of understanding within 1 or 2 minutes and a few sensible prompts. So actually, the just having the information is no longer a competitive differentiator. It's actually how do you use that information to think strategically, advise your client both strategically and actually emotionally. How do you use competitive tension and drive a process to get a really good result for them? And I think ultimately it will push advisors to be better, because the floor has been brought up so much just by the fact there is so much information easily available and easily deployable.
Right. Yeah, I mean, in fact, we're seeing a lot of data set providers, but do you see previously with internet, there was still some kind of a differentiator between different investment banks, right? Different people doing the research and getting their own ideas on the table. But with AI in the picture, especially ChatGPT, Claude, Gemini, right? We see a lot of similarities in the transactions that's happening, the similarity of ideas that's actually flowing into the deal, right? You see those kind of things happening, or you think that's completely, I think, based on person to person and individual to individual, because it is eventually giving the same kind of ideas and same kind of inputs. It's kind of becoming a norm. Or
yeah, I think there is an element of that, in that certainly the large language models, they don't have original thoughts. They assimilate a lot of information that's available on the internet and present back to you, I guess, the most common themes. So the way we personally use AI is it's almost like a very good, very quick junior analyst. So they can give you a lot of information and they can present it in some sensible ways. But actually the real strategic thinking and the analysis and the guidance still is best placed coming from someone with a good amount of experience in the industry, sort of the advisory industry, and also some specific sector insight, because it's cutting through that information and working out what is important, what should I be really bringing to the forefront of any discussions. And there is also a piece of, like you say, what are the interesting ideas that I myself have as an individual that might not be as immediately obvious, or might not come out in a sort of large language model AI database. That's where you can still create a real differentiator.
Right. So Alex, tell me about this. I mean, you've been in this industry for almost like 10 years, 10, 11 years, right, in the investment banking industry, playing a very front role. What is that one deal that you still remember that actually gave you sleepless nights, and it was like, I have to give everything that I have, and it was kind of a huge emotional drive because I understand that the M&A transactions are not easy. I mean, when you're actually working with a seller, forget about the buyer, because buyer wants to buy a company, right? When you're working with a seller, they want a good value. So how do you really? What is that one deal that you still remember?
I mean, look, there's probably been a few that really stand out. So I sort of, like I say, been doing this for sort of 15 years or so. I've done 30, 40 transactions now, and each one of them has its own merits, its own peculiarities. There's on every one, there's always been something that doesn't quite go to plan that you have to think quickly and pivot. I think one of the transactions I remember most fondly was a trade sale I did for an engineering consultancy business, and it was jointly owned by 3 shareholders who all had a role in the business. It had a really interesting application in kind of process automation and safety, and we ended up selling it to a German trade acquirer. And the deal dynamics were fairly straightforward. There wasn't really anything that massively went wrong, but it was a really nice business. It had a really interesting product application. The shareholders were all incredibly appreciative. It was something they'd spent 20 years building, the 3 of them together as co-workers and then friends, and actually helping them sort of realize that sale and get the German corporate buyer to buy the business. They were all able to, one of the shareholders retired, 2 of the other shareholders transitioned into very senior management roles within the acquiring company, and one of them's still there today, sort of 5 years on. So that was it's just a really nice transaction. It was a great business, good client, very good home for the business. It's continued to go from strength to strength in its new ownership.
Amazing. So we have seen a huge geopolitical turmoil going on in the last 6 to 7 months, right? There's a lot of tariffs going on across countries, right? How do you see the next 12 months shaping in the M&A market, right? Because a lot of people were actually waiting for things to settle down and then probably get into this transaction and get the deal flow going, right? So how do you see the next 12 months shaping this entire M&A market?
Yeah, look, I think you're right. The last 18, 24, 36 months have been turbulent. It feels almost like there's been one thing after another that is making the deal harder to conclude. But I think you're definitely right in that people seem to be arriving at the feeling now of maybe this level of uncertainty is just a new normal, and actually we need to carry on business as usual, and deals still need to be done. So certainly since the start of the year, we've seen a decent amount of new opportunities going in. There's certainly a notable uptick from 12 months ago, and that's across the spectrum really. We're seeing a few inquiries coming from owner managed businesses or family owned businesses where changes in inheritance tax are forcing them to think about what does succession for me actually look like. Do my children really want to inherit the business if there is this big tax implication now? Or would I be better off exiting for a strategic price and having the money and actually invest in something that my family have a real interest in the long term? Separately, we're seeing a good amount of activity from private equity, both actually on the sell side and the buy side. So a lot of funds at the moment are trying to fundraise, and it's quite hard to fundraise unless you can point to recent successful exits to prove this, return some money to LPs and get them to back you to go again. So we've got a couple of sponsor-backed sell-side mandates that are kicking off this quarter that are quite exciting. One in the industrial space, one in the tech space, both see reasonable levels of interest. And on acquisition, there's every time you read anything in the news, you always hear about the dry powder private equity have to deploy, and we're definitely seeing that. They are more often coming up, making the trip from London, asking you more regularly, what have you got in the pipeline? What can we look at? What opportunities can we try and get ahead of the pack on? So it feels like there is a lot of demand to do deals. I think the deal making environment itself is still tricky, and that's a little bit buyer nervousness. So getting expensive, investments are more costly, people don't want to be making the wrong decision. And to be honest, if you're head of corporate development somewhere, you're not going to get sacked for not doing a deal. You probably will get sacked if you do a deal that turns out really badly. So we're seeing more scrutiny from buyers on the businesses they buy. And if I'm completely honest, in more businesses in the current time than it was the case sort of 3-4 years ago, more businesses are struggling with trading, which obviously is something that then causes a buyer to stop and think, and think, does this affect the price? Does this affect our appetite to do the deal at all? Does this just mean we need to do more due diligence? So processes are taking longer. And whereas 2-3 years ago, you would say a 2-month exclusivity period from final offer through to completion was the norm, we're certainly now starting to stretch out now.
Correct. I'm assuming because of the tariffs and the cross-border transactions, I think if the transactions are happening within a country, I'm assuming it won't be that complex than when the transaction is happening between 2 countries, right? There's a cross-border transaction.
I think it depends a lot on the individual transaction dynamics. So we're in a quite fortunate position. In the last 3 deals we've completed, one of them's been in the UK business to UK business. One of them's been a UK business sold to a US business, and one of them's been a UK headquartered business sold to an EU business. So we've got a reasonable mix. And I think as long as you can see the strategic rationale, people are finding a way through the regulation, whether it's Brexit related, whether it's US tariff related. We've definitely got clients that have had trading affected by US tariffs. And if I was in a business that was predominantly selling product to the US, I'd be very nervous at the moment, because it's from one week to the next, you don't really know what's going to happen, and it's that uncertainty that makes business quite hard to do.
Correct. So Alex, what is the one advice that you would give to the newcomers who are interested in this investment banking industry? I mean, I'm seeing a lot of people who are actually inclined towards this industry, right? So I'm personally very inclined towards this industry. So it looks very good. It feels very good. There's a lot of things going on a day-to-day basis, right? It's basically you have to keep yourself on the toes every single day, every single second, a minute, right? You just don't get time to do anything else. Just focus on the deals. So what is that advice that you would give to the newcomers?
Yeah, so I think there's probably three key bits of advice that are useful, not only for people trying to break in the industry, but actually, they're kind of 3 bits of advice that I myself still try and follow as you progress in the industry. And the first one is just, what is your competitive edge? Because like you say, it's an attractive industry. A lot of people want to get into it. We're doing a graduate recruitment scheme at the moment, and the number of applicants we've had to the number of vacancies we've got is quite shocking. Almost every one of them is very qualified. Fantastic education scores, fantastic education, achievements and institutions they've been at. Most people have now done internships and spring weeks and courses. And it's just working out, how do you stand out in a crowded market of very high achievers? So we're starting to see a few people with more, left field, slightly unusual achievements or backgrounds that actually do stand out a bit. So I think now versus 5 years ago, we are seeing more people that have tried to set up and run their own small ventures whilst at university, which is actually quite a nice differentiator, because it shows you've got that sort of commercial experience. You've set something up, you've had an idea, you've put it into practice, you've actually generated some money from it, which is to me personally, is quite interesting. It stands out a little bit more than someone that's just done internship, spring week internship, grad scheme. And I think that's something to bear in mind as you progress through your career. It's a very, it's a pyramid structure, isn't it? Corporate finance, M&A. So at each stage, if you want to progress, you have to think, how do I stack up against my competition? How do I find my competitive advantage? How do I win? And I think just constantly focusing on that is a very helpful way to make sure you do keep progressing forwards. Okay. The second thing I would say that sort of goes hand in hand with that is actually be authentic to yourself. I mean, look, it's a long career, corporate finance. You're in it for 20, 30 years plus. And there is always that pressure to try and fit into a mold because you think that's what you need to do to succeed in a particular firm, which, certainly can work, right? There's nothing necessarily wrong with that. But for me personally, if you're going to be somewhere for 2, 3, 10 years, however long, trying to feel like you have to play a version of yourself that isn't necessarily your true self feels quite hard. And I think certainly the last 5 years or so, people are more open to the fact that people from a huge different variety of backgrounds and experiences and viewpoints come to work in this industry. And actually having that big mix of backgrounds and opinions is quite valuable, and it always brings something new to the table, keeps things developing, things exciting. And I think the third thing that really stands out for me is just when you build relationships and build your network, make sure you can do it strategically and authentically and put a proper effort into building a good reciprocal network where you're not just speaking to someone because there's an immediate requirement for you to speak to them for something, they speak to you for something, but actually just build out your network as sort of healthily as you can. Think about how can I bring benefits to everyone in my network, and how can my network help me out in turn over a longer period than just a quid pro quo. So I think having the ability to draw upon a big network of people from a variety of industries and roles is just incredibly valuable as you progress and want to draw on different people's experiences for specific advice or kind of general viewpoints. I think having a really big strong network behind you is incredibly valuable, and that's the sort of thing that you really need to nurture from an early stage in your career.
Correct. Yeah, I completely agree, because I think this particular industry needs you to network with a lot of people, talk to a lot of people, build relationships, because this entire transaction goes by relationships. Because if you're basically an introvert like me who doesn't talk much, and it's very difficult and challenging for that kind of personality. But otherwise, you have to go out, talk to people, attend events, build relationships, and eventually things shape out at a longer term. And it's just not a one-time relationship or a one-time conversation that you actually have with people.
No, you're absolutely right. We're seeing now people referring work into us from an initial conversation you had 2-3 years ago about something completely unrelated, but they might know someone who knows someone who knows someone, and if you're a good person, if you build a good relationship, if you look to help people that way you can, that does seem to pay dividends. Correct.
So thank you so much, Alex. I think it was amazing talking to you. A lot of learning about the industry itself, right? Yeah. So we'll just wrap it up.
That sounds good. It was great to speak to you too, Bhavesh. Really enjoyable.